Welcome back to Accounts Decoders. Today we are diving into a concept that happens often in the real world of accounting: change in estimates. These are the time when you need to adjust your previous assumptions, like your estimates for bad debts or depreciation rates. But the key thing here is that this adjustment don't require you to go back and change prior year periods. Let's break it down. As accountants, we are often making estimates based on the information we have. Take a bad debt expense for example. You might estimate the 5% of your receivables will become uncollectible. But then a year later you realize that the number should have been 7%. Or think about depreciation. Maybe you originally estimated that a piece of equipment would last 10 years, but after a few years you find it's really only going to last 8 years. When you realize an estimate needs to be adjusted, you don't restate prior year periods. Instead, you handle the change going forward, adjusting your entries for the current period. No need to go back and redo past financial statements. Let's look at an example. Imagine you have been estimating that 5% of your accounts receivable will be uncollectible. But after reviewing your data, you find that 7% is a more accurate figure. You would adjust your bad debt expense in the current period, increasing it by additional amount you now estimate. Here's the general entry. Debit bad debt expense for the difference, let's say it's $10,000. Credit allowance for doubtful accounts for the same amount. This adjustment reflects the change in estimate, but it only impacts the current period. You don't touch past financials, you just adjust going forward based on your new estimates. This approach keeps your financial statement consistent and avoids the need to revise historical data. It also ensures that your books reflect the most accurate estimates based on the best available information. To sum it up, when you change an estimate, you don't go back and restate the previous periods. You simply make the necessary adjustments for the current